Alrighty, Alpha Hunters, hope everybody is doing terrific this Thursday. What a gap up we had today on the markets. Really, a lot of it was follow through from yesterday afternoon, Fed decision and press conference continuation. Nice gap up today. And continue to very slightly trend higher. Be pretty honest, I did not see this coming. Or, I would have said wait for higher levels to be bearish. It's going to be interesting because I'm on this huge gap that we opened, or this huge gap that we have here on the market. It's a very interesting one. Yesterday, the Fed, did the press conference thing, and then afternoon we kind of ripped it higher. Then we didn't do much in that last hour and a well, not hour and a half, 30 minutes, last 30 minutes or so. So we didn't really do a whole lot there. But yeah, nice gap up here on the SPY. And gapped up roughly 0.9% on the SPY here. Very nice. Q's gapped up even more than that. What's going on, Allie? How are you doing? Definitely did not see how much bullishness was coming in, or did not expect this. The Q's gapped up 1.25%. So that kind of tells you, just how much the market kind of gapped up today. A lot of it was led by big tech. There's some big tech underperformance, though, during the day. So we'll take a look at some of that. Dude, that gap is a monster. It's a monster. I can drive my truck through that thing. So yeah, it's a very nice, huge gap. Kind of just trading higher for most of the day. Not really too much going on there. SPY, yeah, nice large gap coming into the 50 EMA. Basically, that's kind of where the high of the day is. That's kind of where we rejected last time. Mid-October, and we rolled over. Be curious to see if that happens this time. The thing that I'm going to be very cautious about, and I would recommend being very cautious, is we do have Apple AAPL coming up for earnings. So we're going to talk about that. But the past couple of times, they have not had great earnings. So we'll see. We'll take a look at some of that. IWM up 2.15%. There you go. Very nice move higher on the IWM. Trying to get to the close of yesterday. There we go. Roughly a 1.4% gap up. Very nice trade higher. I really kind of like this basing pattern the IWM has put in over the previous 2 weeks, this week and last week. Looks very, very good. High volume kind of down here on these lower days. And yeah, I like how it kind of just based out there. It wasn't as snappy as the Qs. Qs just kind of like fell off and then just bounced right back. So I'm not too sold on the Qs, but it is big tech. People love their big tech, man. DIA, the Dow Jones Industrial Average, up 1.5%. Not as much of a gap up here. Dow Jones typically doesn't gap as much as the other big ETFs, but the intraday move here has been very strong. It only gapped up 0.6%, and you can see how much the Dow Jones has moved. Intraday has moved very strong, bullishly. RSP, the equal weight SP 500, nice 0.8% gap up here. It's also trended higher. So outside of the gap up, the very strong gap up, the intraday price action across these five has really gone towards the IWM and not in favor of the Qs and big tech. And we'll take a look at, see if we can find out maybe where maybe big tech is lagging. So let's see. Federal Reserve balance sheet data. We'll get that today after the bell as well. That's be another thing. Take a look at sentiment survey right now. Sentiment survey says, yep, not unexpected. Last week, we were kind of down at these lows, even at the beginning of the week. Really up until like yesterday afternoon and today, you know, I would say people were probably feeling pretty bearish. Uh, nice, nice move into, I guess, more bearishness, less bullishness, less neutrality as well. Less neutrality. Had to go back like 3 weeks ago. 3 weeks ago, when we had even less neutrality than what we do now. I'd be curious to see what investors feel like next week. This was expected. This was expected. Kind of mentioned that last week when we were kind of down at the lows last week. Just how that reading might come in, because I was kind of thinking that it would be kind of bearish, and pretty much there it is. The VIX, also another one of those sentiment surveys. Basically, this is a market sentiment survey that basically is updated every day. You can see, yeah, we've had quite a bit of the bearishness really drop off here. So yeah, I'd imagine the sentiment survey next week is going to probably pick up a lot of bullishness. That would be kind of my take. Unless we see a rapid decline, maybe tomorrow, which the only thing that could cause that to happen would be AAPL earnings. So we'll see how that kind of develops. Dollar, very nice breakdown earlier in the day. Nice rally here over the past couple of hours. About 3 hours, nice little rally there. But it had a nice drop off this morning. Yeah. So we'll have to see how this thing ends out on the day. If this is just a little bit of a pullback, maybe it pushes higher, or if this was the kind of retest and now it's going to just roll over going into the end of the day. But throwing a nice little lower wick, kind of how it did 2 days ago as well. So if it still just gets in here and consolidates, yeah, I mean, very much could over the next week or two kind of just push higher. And I mean, just might still be consolidating. That's about it. We'll just have to see. It's just kind of in a nice little sideways zone here for the past, well, really since the month of October started. GLD up nicely, mostly because gold was down. Okay, GLD looking pretty good, so gold's doing okay. Up above these 10 EMAs. I would like to say, yeah, hop in bullish on GLD, but I think the month of October with the whole Middle East issues, crisis stuff, probably a little hot right now. I would like to see a little bit of a pullback. I was kind of hoping we were going to see this kind of pullback back in September all the way down to, I believe, like this lower 160 area. I don't think it's going to happen now. I really don't. If it does happen, it'll be quick. So I don't think it happens anymore. I think you're probably going to be looking to be getting in bullish on GLD. So, all right. 10-year yields also had a nice little drop off yesterday, with the Fed talk. There we go. Fed, interest rate decision and the press conference yesterday afternoon dropped off very nicely, especially at the end of the day here. Right here, this was like the end of that day yesterday, right as the market was closing. And yeah, very, very quick kind of drop off there, or as the market was closed right here. So interest rates really dropped off there. Nice little double bottom here intraday, nice little run. Maybe it's retesting into this like little W point. Maybe it goes higher. I'm not going to make that. I wouldn't make that bet. I'd actually rather see the 50 EMA kind of come up and support it, push the yields higher. But that's just kind of me. But outside of that, you're probably looking for more of a longer-term consolidation. Other than that, yeah, I got nothing there. 10-2 inversion. 10-2 inversion. Nice drop off here, mostly because the short-term rates are dropping off quite sharply. Take a look at that 2-year. Nope, I'm wrong. My bad. 2-year yield's actually holding up. So this is the interesting part. I don't know why I said the 2-year. I was thinking the 10-year, but I said 2-year, and I don't know, got sidetracked there. But yeah, the 2-year holding up like this. This is kind of interesting. Because as we left the Fed yesterday, once the Fed was done in his press conference, a lot of people were optimistic because the Fed basically said, "Hey, you know what? Risk between rate hike and rate cuts are kind of balanced. They're in balance." That was the part. I mean, I remember hearing that in the press conference, but that was the part where, okay, I mean okay, that's fair, and that might be true. Maybe that's how the Fed sees it, but the market really liked hearing that. I guess they also did talk about yesterday how inflation has been coming down over the past couple months. They're really liking that trend. And I do remember them talking about that. But the part that nobody has mentioned that I kind of really hung on to was the simple fact that the Fed expects for inflation. I forget the ticker, but so I'm gonna go look for it this way. Inflation. There we go. So there you go. So inflation. A lot of people are expecting inflation to come down, and the Fed to follow with rate cuts. And the Fed basically said yesterday, they said, yeah, we expect inflation to eventually get into the twos next year, and then the year after to get into the low twos. So it would be something like this. And the market is expecting, I don't know what the market's really expecting on inflation, but I know they are expecting the Fed to probably cut rates, which is not a bad idea to go check and see what the CME Fed Watch tool is now doing after yesterday's Fed day. So 20% chance of a rate hike from the market expectation. So when do we get, oh, interesting, January, even more of a rate hike probability. That's interesting. March, a little bit more of a hold. May, hold. June would be the first time it looks like the majority of the market seems to think we're going to get a rate cut. So halfway through next year, and that's kind of what I was going to say. I was going to say halfway through next year, but even July looks like a rate cut there in July as well, even down to a lower level. It's kind of split. So that's where I look at the market, and they're expecting rate cuts right here. Oh, excuse me, but yeah, where this vertical line is. Let me do this right here. And if the Fed is serious, which someone did ask yesterday in the press conference, would they be okay with satisfying for about 3.5% and saying job done? And he basically said no. So it didn't sound like they were willing to, give up on the whole premise of getting inflation down to 2%, which means they're probably just going to be holding rates at about 5.25% up here until this inflation comes down. Which, if they're not expecting inflation to get down to about 2% until the end of 2025, maybe 2026, the market has much more discounting on equities to do. So that's why I'm not leaning bullish. Yeah, that kind of tells you why I'm not leaning bullish. And the other thing is why would they need to cut rates if they don't need to support the economy? I mean, that would be another thing. So why does the Fed need to cut rates if they don't need to support the economy? So, yeah, I mean, that's just kind of how I took yesterday. I know headlines and other people kind of focus on different things. I didn't hear anything that says that they're going to be cutting rates anytime soon. I didn't hear anything Yeah, that would keep them from holding rates where they are. They said the economy, jobs, spending, consumer spending, all very resilient. He even mentioned how they were shocked. He said it has shocked everybody about how resilient those three aspects of the economy have been. Just crazy. HYG up pretty good, LQD up pretty good. And that's the thing about like today's gap up. Like you look at the Qs, we're going to take a look at sector rotation right now. Uh, I don't know, like it hasn't had the intraday move like some of the other stuff has. Some of the other sectors. Not to say it hasn't trended higher. Let's take a look at that sector rotation. All right, there. Okay. Okay, sector rotation. Real estate doing really good. I'm going to go check long-term yields. Long-term yields might be really getting crushed today because we know the 10 years down pretty good. 2 years actually positive, which is why the 10 and 2 inversion is down hard. So I'm curious what the 20 and what the 30-year Fed yield is doing. Energies are up good. Discretionaries are up good. Utilities, financials, industrials. Interesting. So this is very interesting. Tech underperforming. Materials underperforming. Healthcare underperforming. Staples underperforming. And communications, XLC, underperforming. So there's really only one big tech sector that's outperforming, and that's discretionary. XLY there. Okay. The intraday, so this would be more of the, probably a little bit more of the shocking rotation, is the intraday price action. So let's take a look at that. Yeah, XLC underperforming pretty good. Last I looked, Meta was actually negative. So XLC negative there. Materials underperforming. Industrials underperforming. Discretionaries and tech both underperforming. Real estate, financials, staples, healthcare, all underperforming there as well. So there's only two sectors that are really actually outpacing on the intraday price action. That's utilities and energies. So, okay.